Wow, this is a physical panel, right? After two Zoom interviews, which already touched upon the topic about ESG, sustainability, and impact financing. And Melody has already introduced the panel, so I won't spend more time on that, but maybe we can go around and have a quick introduction of ourselves. Start with Jen.
Well, good afternoon, everyone. I hope that our physical presence gives people a little bit more attention. It's a switch from the virtual attendance. My name is Jie Gong. I'm a partner with Pantheon Ventures. We are a global private markets fund of funds with $71 billion of assets under management. ESG is near and dear to my heart. 5 years ago, I founded and still chairs the ESG committee at Hong Kong Venture Capital and Private Equity Association. I'm also the co-chair of ESG within my firm, Pantheon. And lastly, I had the privilege to be serving on the UNPRI Private Equity Advisory Committee from 2017 to 19. So happy to share experience with the audience today.
Thanks. Keenan.
Yes, hi. Hi, good afternoon, everyone. I'm Keenan, and it's good to be here today, representing two hats. I'm running from GetLinks, early stage company invested by Cyberport and Alibaba in the future of workspace. But today I'll be speaking more on behalf of an early stage venture funds called AERA, which we have been around for about 5 years, invested in about 30 plus companies. So good to be here to do some sharing today. Thank you.
Helen?
Thank you, Cindy. And good day, everyone. It's really a refreshing change to be here in person. I'm Helene Lee. I'm the co-founder of Go Impact. I've been a management consultant turned banker turned impact entrepreneur, investing in the ESG space long before it became a jargon and popular. So really happy to exchange with everyone and see maybe where the gaps are and what we can do collectively.
Last but not least, online with us, Dr. Glenn Frommer.
Good afternoon. My name is Glenn Frommer. I'm the founder of ESG Matters. We have offices in Hong Kong and Copenhagen, and I have a history that goes back to the 80s dealing with environmental issues. The original genesis of that is the US space program. I'm looking forward to a very active sharing today. Thank you.
Thank you. So now let's jump into the discussion. So Jay, ESG is a very broad topic and you have a lot of experience in terms of investment. So how do you define ESG? Because of environment, sustainability, and governance, right? So it's very broad. So when you do your investment, how do you define the thesis? And what is your area of focus and the reason for focusing on that particular area in this very broad space?
That's an excellent question to start the conversation because it really frames the discussion. ESG is a very interchangeable word with so many other words: responsible investment, sustainable investment, and some uses to refer to the impact investment. A very high level and very brief overview of the history of ESG. ESG started 20 years ago really as a set of negative screening, i.e. you shall not invest in firearm, you shall not invest in tobacco, and so forth. And over time, it moves to what we call responsible investment. So responsible investment adds on top of the negative screening an active layer of looking at the risks beyond just the industry-specific prohibitions, if you will, and also look at the ESG opportunity to create value actively. Over the last several years, that has further evolved into sustainability. Simply put, sustainable investment really puts a future lens onto investment. It looks at a given investment and think in 30 years' time, how will the sector evolve? What will be the climate change that have an impact on the physicality of the assets or the nature of the business? So it's to future-proof of your business in a very, very brief way. And impact is something to further I would say, up the road, not down the road. Impact really uses I think the imperative of impact is actually to create social and environmental benefits. So it's intrinsically virtuous from an ESG perspective, and financial return comes secondary, as a secondary objective. And that separates impact from sustainable investment and responsible investment. At Pantheon, all we do along the side of responsible investment and increasingly sustainable investment. We have not ventured into impact investment. But when we draw the line, those are the areas where we currently occupy on the spectrum.
Yeah, that's very interesting. So while we hear from the investor point of view, let's see what Keenan can give us from a startup point of view. As a startup founder, right? How do you see the importance of ESG, especially when you implement ESG during the startup mode? Startup, we are talking every day. You try to survive, right? And do you experience any influence from your investors in terms of implementing ESG in your business?
Yeah, thanks for that, Cindy. I think Gia mentioned, there's a big spectrum of investments, and it's good to see the big investors versus for us is early stage venture fund, right? So today I can talk about, GetLinks as a startup founder in a financial education inclusion. How does man and machine work together? So that's the GetLinks journey that we've been on. But I think today I'll spend a little bit of time with the perspective of AERA VC, which is our early stage venture fund, and think about these are the exact type of companies we invest in, early stage companies, but we look at things from a very different lens, because when we're looking to invest in companies, we're looking at companies that have a direct mission, a core mission that they execute out to implement and effect for these social changes or impacts, right? So whereas ESG, I think it's a very good framework, covering environmental, social, and governance. And this framework could apply to any companies. It could even apply to a coal company, right? So putting ESG lens on any company, if it was a coal company, whether it's, what's the negative impact on the environment, or if they're helping out a little town, or on a governance fund, they're putting a ladies on the board. I think that ESG framework is important, but is not the way we look at the lens, right? Because when we're at that super early stage, we really look for companies that are built in with that mission to drive change. And so therefore, it's proven that it's got good return. We've invested in companies, at the less than $10 million valuation. This year, 2 of them became unicorn companies with over, $10 billion of valuation each, right? 1.5 billion. So there's definitely enough of excitement in this space. Yeah, I'll leave it at that.
Okay. So turning to Helen, you have been, you just mentioned about your journey in your career, being a banker and investor, and now very focusing on putting together investors and also deals through your platform on the ESG side. Do you see any specific gaps when putting deals and investors together, and how do you like to really narrow these gaps?
Yeah, thank you, Cindy. That's a really good question. And I think riding on what Kenny was saying earlier about this upskilling, reskilling, that is very much needed in the space, as man and machine need to work together or find a way to work together. The automation plus the personalization, the two sides of it. And what Jay was saying, and Keenan was saying earlier as well, I think somehow the practitioners in ESG have managed to coin more acronyms than we can even remember. PRI, ESG, and you have the 17 SDGs, and we are all swimming in alphabet soup before we figure out a way how to work together or how to better deploy our capital, etc. So I think one of the fundamental gaps that we are seeing, that we are actively plugging, is the learning gap, okay? There's got to be a common baseline of knowledge that people can actually understand it. People can actually segregate the area where they are, interested to invest in or to deploy their resources to. So that is something we're actively partnering with a lot of institutions across the board, really to do two things. We need to fast track it because honestly, whether there's COP26 or not, we are running out of time to address a lot of these issues. So fast tracking it means that it has to be mainstreamed. It cannot stay at a kind of CSR level. It cannot stay at just a philanthropic level. It's got to reach the mainstream people in order for this to be able to take forward. And I think the learning gap is really at the heart of it. There are so many more areas we should invest in. Look at biodiversity, nature-based solutions. Between 10 to 30%, according to a latest OECD statistics, of the world's GDP are attributable to nature-based or biodiversity solutions. And that is hugely underinvested as an area. So I think there are lots more that people can work on together, and knowledge is at the heart of it.
Yeah, I think this is really, bugging a lot of corporates when they are trying to implement the ESG. You don't know the baseline, right? So you don't know how to measure if you don't have a baseline. So turning to you, Glenn, there are really increasing demands for the corporates to disclose, like the ESG data, and how to set the baseline, and how to use maybe data to empower this business to really track the progress is something that maybe you can share with the audience your views on that, and especially how they can really achieve the sustainable development goals. That's, a lot of people are advocating right now.
Thank you. A detailed response to that question might take me 3/4 of an hour. That's a bit long for the panel, so I'll try to be very brief. Businesses need to focus on their credibility and accountability with regards to ESG. If they're going to launch into that direction, they have to do it well and do it completely. The panel has already expressed some of the issues regarding that. You just mentioned the SDGs. The SDGs are 17 goals, as we just heard. It's 169 targets and 220 metrics. I know very few organizations that can report annually on 220 different metrics. To bridge the gap that you spoke to, the data gap, I think businesses have to look at what's in it for me with this ESG. What am I getting out of it as a business? Now, the phrase that's used is competitive advantage. Competitive advantage, when it came up, had to do with barriers. Let us build barriers for our business so no one can compete with us. We just heard our last speaker speaking to tearing those barriers down and working together. So we need a paradigm shift in what we're talking about. For businesses, we need to look at legal compliance. Now that could be as an outcome of risk and looking at reputation protection. It could be improving our operational efficiency. It could be encouraging investment in the startup or the ongoing business. And it could be in developing our staff. We're looking at growing market share and the market growth in itself. Now, our first speaker, Xi, mentioned a timeline of 30 years. I'd like the audience to think back 30 years. We were flying in and out of Kai Tak. We had just started the airport core projects, and there was no airport railway. Things have changed a lot. Could we have predicted our days today 30 years ago? I don't think so. And I don't think we're able to predict what will happen in 30 years from now. But we need the knowledge. We need to empower each other and we need to focus on the young people. Thank you.
Okay. Yeah. Thanks a lot. I think it really, let us think deeper about how to, really, when we do the implementation of the ESG strategy, what is the first thing that we should be doing in order to implement it, be it in a startup, be it in investor, because a lot of investors are also looking into incorporating ESG in the investments and also in corporate. So does the panel has any advice on in terms of the implementation strategy for ESG?
I can speak from an investor's perspective. ESG is really an integrated layer in any investment process, really from the initially screening target, investment target screening to due diligence, and then to the investment underwriting process, and then to monitoring of an investment in its duration, and finally to exit. And in the course of the monitoring and exit, there's also the reporting aspect to the stakeholders, what the ESG credentials are. So really throughout, it really calls for standardization. The topic has been talked quite broadly by all the panelists, but that's where we see a divergent set of standards, and the different people are adopting different standards, which causes difficulty and complexity in really doing peer-to-peer analysis on what those numbers and the matrix interpret into. So I think that's an obstacle that needs to be, in a way, resolved for the industry overall to reach universal reporting.
Yes, sort of like an IFRS, right, for ESG. Any other thoughts on that?
Maybe just a quick line, whether it's companies big or small, I think the leadership really have to look at ESG as a fully holistic approach, right? Full commitment, the leadership's got to really get behind it, up, down, center, right, left, around ESG, such that that's the only way that this thing could work, right? But for companies that are a little bit more ambitious, right, in this paradigm shift across, turning their company more ESG is really, maybe perhaps looking at the whole supply chain, because just their own footprint alone is not enough anymore, right? So they got to really look at the whole suppliers, the supply chain, and how all of that stuff is impacting the value chain that they're in. Yeah.
Yeah, and if you allow me to add my 4 cents to this, 2 cents for corporates and 2 cents for investments. Okay, the 2 cents for corporates are disclosure, reporting. Both are extremely important. And on that, I think the corporates need to find the lower hanging fruit in terms of what are the areas that will deliver optimum impact for the business model while achieving a sustainability sense. I'll give you an example for real estate companies, for instance. Energy efficiency is the low hanging fruit because it can save you money, and it can also hit quite a few of the sustainability targets that you will be tasked with in your disclosure and reporting. So that's the 2 cents on the corporates, which obviously varies, depends on which sector the companies are in. My 2 cents on investments, and in front of an expert like Jie, I tend to think of it as 2 ways. First, the ESG lens allows you to mitigate certain risks. So a risk-adjusted return, you can apply the ESG lens. It has a risk mitigation factor. It also has an alpha generation factor. If you invest in companies that actually do well in the sustainability area, the chances are that quite a few of them would do well in terms of financial returns as well. So there are opportunities to generate alpha as well as to use that to mitigate risk. So my humble 4 cents.
Glenn, do you have anything to add on?
Thank you. I think the 2 themes I would look at as a business, an investor, and the banks is reducing greenhouse gases and diversity, equality, and inequality. Those are the 2 main sectors that we're seeing investment in. Those are the trends, how they affect your portfolio, how they affect your business, how they affect your staff. Those are the 2 key. All this discussion about alphabet soup, it's a kind of noise. You have to figure out what's important, keep to the indicators you choose, and keep measuring them. We haven't changed much. Report on your scope 1, 2, and 3 greenhouse gas emissions. Look at the diversity, look at the percentage pay that you're overpaying your CEOs in terms of your median staff. Tell the world, don't be ashamed. And pay the women as much as the men.
That one I can agree. Okay, so CVCF platform, we have both investors, startups, and corporates. So, and of course, since we are here in Hong Kong, I guess people will be interested, especially in in Asia, the type of ESG maybe ventures or ventures that you think will be more likely to succeed, and the reason why. Anyone?
Well, globally, the trend is towards a world of decarbonization. And I think that's no exception in Asia. We have seen so many government drives from all markets, all key markets, towards decarbonization. Also, there are many technology companies, startups, as well as mature technology companies investing in all sorts of solutions towards battery storage, smart meter, and everything else. That's an area that's going to just yield a lot of interesting opportunities for all of us. And I think that the other area is continue to accelerate on the digital front. Digitalization is here to stay. COVID certainly propelled its growth. Those are the areas that there are a lot of active capitals looking for opportunities, and they're likely to be very warm reception, both from the IPO market and also future trade buyers for capital.
Right. So, Kenan, you have been investing, right? I think most of the portfolios are still outside of Asia. So maybe can you contrast or share some cases to contrast what you will foresee in Asia?
Yeah, so give you an example of a company, called Solagen that does hydrogen peroxide and gives out a lot of emissions, and we invested in them very early. But what we see is a lot of these technology didn't quite exist in Asia yet, right? But as the world is getting closer, hence kind of when we built GetLinks with a few million of these digital talents, it was whether we can bring some of these technologies in and implement it through. Right? The previous speaker spoke about data, AI, but at the end of the day, we still need the talent pool. Right? That is mass and beyond to implement through. And I think we're leapfrogging in a sense that a lot of the technologies we're seeing in the West are being brought back to Asia now, especially in the climate change space, right? So 5 years ago, when we started this narrative with a lot of family offices in Asia, nobody wanted to hear about it. But now it's becoming a key topic with good returns. And I think climate change is one of these big topics that is becoming the real mega issues. And we're seeing a lot of these technologies coming back here. And I think over time, we'll see a lot more of these founders, companies emerging out of Asia, which is pretty promising and encouraging for all of us. Yeah.
How about Helen?
Yeah, I think, to echo what Jay and Kenan was saying, I see two areas that stands out. One as a more mature area where there are lots of capital actively chasing opportunities. The other is a sort of slightly more up and coming, but I think equally promising. The slightly more mature area is everything around climate tech, whether it be energy efficiency, transition to cleaner energy, and all that, and all the technology that will be required to drive that. The second area that is more up and coming and relating to the capital and the reskilling that both here we talked about and also Kenny talked about in the earlier fireside chat, is that whole area around circularity, okay, that leads to sustainable cities, what you can invest in with all the natural disasters we are facing. I think everybody from the development banks like World Bank to the private investors, sovereign wealth funds are all looking at ways in which circularity or sustainable cities deserves their capital to invest in. So that is very much up and coming. And that is not just investing in 5G or water or waste. It's also investing in human capital that will be required to lead that, will be required to implement that. So I see that as a more up and coming phase as well.
So how about Glenn? Can you share some examples that you see in, say, in Europe versus what you have seen in Hong Kong while you're here? And how do you think, these maybe two gaps or this knowledge can be exchanged?
Let me add to the panel by the previous discussion in 2 points. First, food. Food is the component we cannot do without clean water. In Scandinavia, we have impossible meat, impossible foods. We have a very large percentage of the population that have a meat-free diet. And investing in those types of production processing will be very helpful. Taking the last comment about circularity, looking at the outcome of the process, methane, carbon reduction, we're speaking of the methane pledge coming up at COP yesterday. The second area I'll talk to is governance, the G, which is the boring part of ESG. Hong Kong has, until further, at least a set of laws that can govern the processes. We have the exchange that requires reporting annually, and we have new facets coming up under that. In Europe, we have the EU taxonomy. We have the sustainable finance regulations disclosures that are coming up. We begin to define what sustainability means in terms of investment, and we're looking to report on environmental sustainability in terms of revenue, profit, EBITDA, CapEx, and OpEx in terms of investment. These trends are something that we can start teaching at the university. We can get the big 4 companies which are helping us with our financial reports to start teaching how companies can do that. So just those 2 areas, very active in Europe.
Yeah, I guess I hear a lot about, understanding the baseline, training people, having, the top-down approach in, really driving this trend, and of course, a standardized reporting standards that everybody can share. So we still have like 2 minutes left with this panel. Maybe I can open it to the floor to see if anyone has any questions to ask our panelists. Yes. Can someone give this gentleman a mic?
Hello. Yeah, thank you. A very interesting session. I appreciate it very much. So I'm curious to hear the panel. We've got a lot of experience around ESG, etc. To what your view is on B Corp, and because B Corp is addressing, I think it's something that bridges both ESG and also the impact aspect of investment, as well as sets out a very clear and concrete steps on how to measure these different, to assess these different aspects from a stakeholder perspective for companies. So just some comments on that I'd be quite interested in hearing.
Anyone? Glenn, can you hear the question?
Yes, thank you. I work with a company in Israel that's B Corp certified, so I'm quite well aware of B Corp and its requirements, and it's done quite well. B Corp is something that people should be looking at more in depth, and as the questioner posed, it does give us insight into the social side. It gives us a set of very consistent and important metrics. But let me refer to Keenan's point. If the leadership of the company is not backing up that B Corp certification in a big way, and I mean big, it falls to the ground. It impacts credibility, it impacts the accountability of the company.
Yeah, and if I can just add to that, I think B Corp is a very valuable and noble vision for which companies can behave and have, being measured. But hopefully, as we are mainstreaming the agenda, ultimately all corporations will be B Corps. That we don't need to make a distinction between B Corp and non-B Corp. Like we don't make a distinction between an investment that makes an impact or an investment that makes no impact. So maybe the effort is to actually make it redundant in some ways.
Okay, yeah. So I think time is up. Thanks again for the panelists to share your insights. And as an investor, we always look for a purpose when we invest into startups. So I guess to allude to Helen's point of view, at the end of the day, we hope that all corporates are becoming a corporate with a purpose. Thank you.
Thank you.